Okay, hello everybody. Just getting started here. We're gone 1 o'clock, so we'll make a start. Thanks for joining us at the IoD for this session on business interruption. We appear to have a bit of a screen issue on my screen at the moment, but we'll mute that in a moment and deal with that. So with us today, we have three speakers. We have Chris Guy from RLK. We've got Neil Fawcett from Paper Buildings Chambers, and we have Tej Parek from the Institute of Directors, who's our chief economist. This session was originally talked about at the very start of lockdown, when IoD members were talking to us in the West Midlands about the fact that their business interruption claims were not being positively responded to by their insurers. And we talked then about what we could do. There's been quite a lot unfold since then, and of course it's all against a background of the economic situation. So I'm going to hand over now to Tej to talk us through the background to this conference today, and then we'll be handing on to our specialist speakers. So Tej, over to you.
Thanks, Brian, and hello to everyone joining the webinar today. So I'm going to do a bit of scene setting just to give you a bit of the context for what we'll be talking about later today. So I guess we're about a few weeks now into 2021. So I thought I'd kind of just give a bit of a macro update on where things are and how things have changed since the end of last year. And there are four key factors essentially that I'm currently monitoring. The first is the pandemic and pandemic dynamics. The second is Brexit and the adjustment to the new trading terms. Then it's the budget, which is coming up, of course, at the start of March. And then it's just the general kind of state of the business community and how our members are coping. Now, taking those in turn, beginning with the pandemic, I think, of course, the big factors we're looking at here are monitoring the vaccine rollout, because that will ultimately determine how and when restrictions can be lowered, and that really does remain the biggest variable at the moment affecting the economy and the business community. So, there'll be certain upside and downside risks there depending on how the vaccine rollout pans out and progresses, but also there's this ongoing discussion around the potential discovery of new resistant strains of the virus, and that will obviously have a knock-on impact on the rollout and when restrictions can be loosened. The second factor I was monitoring was, of course, Brexit. That hasn't really gone away as much as we would have hoped it would have, and we're monitoring what our members are saying over the first few weeks of January, and clearly there has been a significant amount of disruption, even if there wasn't new tariffs or anything like that. The non-tariff barriers, if you like, in terms of the new customs checks, the delays at borders, and just generally just trying to suss out how to kind of mitigate some of the new costs associated with trading across the border, have been amongst our members' concerns. And I think, it's important to remember that it was quite a thin deal. So, over the course of the year, at least, there'll be some ongoing political risk around negotiations on some of the big ticket items around financial sector in particular, and also the wider professional services industry. Now, with that disruption this year and, more tighter trading conditions, I suppose, with our biggest trading partner, we might expect, a few percent of GDP to be kind of taken off over the course of the year. And then in the longer term, that would kind of look slightly bigger. Now, in any normal state of the world, that would be the kind of main focus of the news. But obviously, that's nothing compared to the 20% drop in the size of the economy that we saw back in March 2020. And so, a lot of the kind of story is now, how do we kind of recoup that kind of loss? Ultimately, with the kind of announcement of restrictions extending as we kind of entered the first week of January, the recovery is essentially being pushed back into Q2 or whenever restrictions can be lifted gradually. So we expect to end last year very subdued given the restrictions that we saw in November and moving into the Christmas period. And I suppose with restrictions over this quarter and potentially being reviewed again, I suppose, in February and being pushed out until, as many suspect, Easter time, we're expecting the economy to shrink, at least in the first quarter. But it's important to remember that many sectors are still open compared to previous lockdowns. And also over time, a number of our members and businesses generally have adapted and found ways to adjust to the pandemic. So fundamentally, we're operating at around 10% lower than where we were pre-pandemic levels, and growth over the course of the year should reach, around the 5% mark. And the economy should be back to where it was pre-pandemic by around mid-2022. That's obviously later than, many were expecting by the end of this year, had restrictions not been amped up at the start of January. But I think the other key factor that is very important, and one of the things I'm monitoring, as I mentioned at the start, is the budget and government support. Now, with restrictions likely to continue beyond Q1, it's obviously paramount that there is ongoing government support, and particularly from the furlough scheme. We know that a lot of people are still on the furlough scheme as we speak. And I think the other element that is, really crucial is there's been a lot of narrative around a lot of kind of pent up savings and potential the spending bounce and investment bounce once restrictions do ultimately lift up. But given the state of the business community at the moment, it's very unlikely that, we'll see this immediate bounce back in the business community. And so there really does need to be some form of a stimulus when the budget is announced on March the 3rd. And the reason for that is really the fourth point that I wanted to make, which was the general state of the business community at the moment. So we have ongoing conversations with our members and we survey them on a monthly basis. And it's very clear that despite the fact that many of them have, tried to adjust to restrictions and, change their business models, many are still facing very low revenue streams, and cash flow is particularly challenging. Even if you can adjust your own business because other sectors are perhaps disproportionately affected by the pandemic, it still affects your own business through supply chains. At the same time, many are facing the prospect this year of having to pay up some of the tax deferrals they made in 2020. Many would have taken out loans, which means there'll be interest payments due. And so costs also are still relatively high. And so broadly speaking, many are quite, reliant still on the government providing some sort of support. So all of these factors, if you like, the legacy costs of 2020 will act as a weight on the recovery of the business community, even as restrictions ease. And it's important to remember that all sectors are affected by this. We know that the retail, hospitality, and leisure sectors have been particularly badly affected, but all sectors and markets have faced their own challenge. That obviously includes the insurance sector itself. So alongside a number of challenges facing the insurance sector, whether that's ability to provide coverage for certain kind of issues, dealing with the uncertainty at the moment, and perhaps even withdrawing from some markets altogether, all of these factors combined in the insurance sector is kind of exacerbating some of the challenges facing the business community. And we survey our own members, and those who have had to kind of take a look at their policies again and refresh them, many of them have noticed they're facing a number of rising costs. So around 50% of our members said professional indemnity insurance has increased, as has business interruption costs, and insurance around directors and officers insurance at the same time. So honing in on the particular challenge of business interruption insurance, and providing you a bit of an overview of the Supreme Court judgment and what it means for your business. I'm going to hand over to the legal experts, Chris and Neil.
Thank you very much, Tej, and hello to the audience. I'm Chris Guy, a solicitor at RLK Solicitors, based in Birmingham, and the business interruption as a result of coronavirus has kept me very, very busy, and the firm since the beginning of March last year. As a firm and as an insurance specialist myself, my career, I've always dealt with insurance. I'm a litigator, but particularly with insurance. I identified that very early on, when we were having the warning signs about coronavirus and the implications on business, I went to our own insurance policy. We've got multiple policies with the different offices that we have. And I looked at that and saw there's a claim here. If this goes horribly wrong, we'll be able to claim under this insurance. And so we put the insurance companies on notice, separate ones. And very shortly, we received rejections, which I thought that cannot be right. I was contacted by clients at the same time, and they'd also been in the same position. And I reached out to further clients, and there was a trend occurring here. And before we know it, we were one of the UK's leading firms dealing with these types of cases. We've reviewed thousands and thousands of policies, and we have hundreds of clients. We are approximately at 700 clients now, and we're growing by the day. We're receiving hundreds of inquiries per day, and really making a fight in this arena. I, as soon as I was involved in this, quickly reached out to Neil Fawcett, a barrister and part-time judge at Three Paper Buildings, who I'll introduce shortly, and we both put our minds together as a solicitor and a barrister, and we both agreed something is not right here. Obviously, our clients were in exactly the same position, and we were all making noise. And eventually, the Financial Conduct Authority, the regulator of the insurance companies, soon came on board, and an unprecedented legal process engaged to get a judgment in the Supreme Court, the highest court in the land, within 6 months is just remarkable. Now, I'll let Neil explain a little bit about that judgment. What we're trying to do here, guys, is not bore you with the law. We want to make this as practical to your business, and give you hints and tips as much as possible, rather than bore you with the law. I know what as solicitors and barristers are like, and I'd like to say we differ in that regard. So I'll pass over to Neil about this, and I'll follow up with some various other practical points to assist. And I think it's very important to use the Q&A functionality that this Zoom webinar has, because we'll be happy to answer as many questions as we can. So please put them in there rather than the general chat, the Q&A section, and we will do our very best to answer those questions. I think it's fantastic what the IoD have done here, and given its members the opportunity to ask very important questions, practical questions, to a solicitor and a barrister about the implications of the members' business interruption, because I appreciate that their insurance companies, for the majority, have probably said no, and probably wrongly have said no. So to get this opportunity is really good, because otherwise you'd be instructing a solicitor and a barrister on an hourly rate basis, which is not cheap, especially in these difficult times. So without further ado, I'll introduce you to Neil.
Hi everyone, thanks for giving us the opportunity to talk to you, and I can perhaps sort of summarise some of the legal aspects of these policies, and what the FCA decision was about and what the Supreme Court decision was about. I won't go into all the sort of rather tedious points which were dealt with, because I mean essentially there's so much of these policies which is specific to your individual business based on the schedule that you that have negotiated with insurers, and also the different policy wordings that you have to deal with. But what the FCA did essentially was to bring a case really early on, and as Chris has said, actually brought it to a conclusion in the Supreme Court within a remarkably short space of time, in order to get some guidance on some of the larger issues that affect most policies, and they got that guidance, and I can summarize that, but it doesn't detract from the fact that as has been confirmed to us by the FCA directly, they essentially had to draw a line under what it was that they could really ask the court for guidance on, just in terms of expense and time, and so the decisions by the divisional court and also the Supreme Court were limited to more general points about causation and what that meant, things like definitions about what occurrence of a disease means and what manifestation of a disease means, and things like that. There are other arguments that relate to individual policies based on the specific wordings of them, which I've no doubt will rumble on in the courts for a long time. Not only that, but obviously the professional negligence side of things as well, as a sort of another sphere of litigation. The FCA case did get some key decisions, which were, for example, on what manifestation meant and what causation meant. The starting point with all of these insurance policies is that they're contracts. They're basically just contracts like any other, in that you've got to interpret what the parties meant, reasonably speaking, at the time that the contract was entered into. So the court, in any case which you bring against the insurer, is going to have to make a decision based on the wording as to what the parties intended their contract to mean. And it's as simple as that, really. There's some little tweaks and rules which apply to insurance contracts, which might not necessarily apply to other contracts in the same way, but by and large, that's the long and short of it. Your contractual documents are your schedule and your policy document, and the two overlap and vary very considerably based on whether you've got an insurer like Allianz or Aviva, or you've got a smaller insurer, or a Lloyd's syndicate, for example. The sort of whether the contractual wording appears in the schedule or an annex to it or in an updating letter or in a sort of comprehensive policy document varies. But basically those are the two documents you're looking at when you decide whether you want to bring a claim or not. You've got to be very careful as to whether you've got those documents. We see, for example, that in some cases it might be that the customer, the business, has actually only got a summary of what the policy is, which can be quite misleading and very generalized about what you can claim for. So the first step is look at the policy, look at the schedule, and primarily we're talking about business interruption disease clauses. There are other clauses which are going to help you, but primarily it's the disease clauses which provide for losses as a result of COVID-19, and they themselves vary very widely. So you'll see some policy wordings which say that there's got to be a manifestation of the disease at your premises, and I can just summarize what that means. There are some others which say that there's got to be an occurrence of a disease within 25 miles or 10 miles, or in some cases a mile, and that's the trigger. There are some clauses which go further and actually list the diseases which are intended to trigger the policy. So those diseases might include things like encephalitis, meningitis, measles, sometimes even general terms like food and drink poisoning, and occasionally terms like plague, which is one of the areas of argument that we're dealing with at the moment. But the but there are greater issues as well about things like causation, because a lot of lawyers will be familiar with this, that in, for example, a professional negligence or a road traffic case, or indeed any kind of negligence-based case, you're going to be having to ask the question, well, what actually caused my losses? And the response of a lot of insurers to us, at least initially, seemed to vary and was actually quite inconsistent. So we'd sometimes have letters sent to us saying that we dispute the fact that it was COVID that caused your business to close. In fact, what caused it was the pandemic response, which was the lockdown and the government restrictions. And in other cases, rather contradictorily, we had responses saying, well, actually, it was the lockdown and not COVID. So the key point about the FCA test case was it wanted guidance on what causation meant. And both the divisional court and now the Supreme Court agree that there isn't a strict but for test as far as causation is concerned. You've basically got to look at the whole thing in the round. You don't just sort of say, well, it's just one aspect of the pandemic that caused it. The FCA test case initially put it forward as a sort of composite test of causation, which included the spread of the disease, the government interference with business via the lockdown, and the whole thing as a sort of composite causative factor. The Supreme Court largely agreed with that. It added in the point about sort of concurrent causes, giving an example, which I found quite helpful, which was an example of a number of people all pushing a bus off a cliff. You know, you couldn't seriously say that there was a strict but for test, because I mean, actually applying that would mean that actually nobody caused it to fall off the cliff, because in fact the causative factor was all of them. So the Supreme Court basically highlighted that the but-for test in these cases doesn't really work, and actually what you're looking at is whether you call it composite causation or whether you call it concurrent causation. It's basically each person who's pushing the bus off the cliff is the cause along with all the other people. And of course the relevance that that has for your business is that if you've got a policy which says that you are entitled to losses arising out of an interference from an occurrence of disease at your premises, what you're arguing, and now very validly on the basis of the Supreme Court judgment, is that an occurrence of disease at your premises did actually cause your loss, but along with all the other occurrences of diseases at everybody else's premises indistinguishably. So you don't have to actually show that, for example, the chef or the managing director being infected led to the business suffering specific losses. Your losses still flow from the pandemic, not that one individual person. So it's a huge point that the Supreme Court and the Divisional Court had clarified, which I think gives a lot of support to claims which, as I say, were rejected on a number of varying bases. I mean, one of the other points that was very significant, and which will, I think, continue to be significant, is what it means when it's said that an occurrence took place on the premises, or what it means when it says there was a manifestation of the disease on the premises. And how do you prove that? Do you actually have to show that you had a particular employee that had a positive test? And especially in circumstances where we all know that certainly in sort of April, May of 2020, it was near impossible to get a test and any kind of firm diagnosis, not only because testing actually wasn't quite as good as it is now, but also because the actual availability of testing wasn't there either. So the FCA test case at first instance in the divisional court, confirmed initially that you could prove it by a number of means. You didn't actually have to show a positive test result. So where you've got a policy that says that you had an occurrence of COVID either at the premises or within a certain radius of the premises, you don't have to show that an employee specifically had a positive test result. You can actually rely on, for example, somebody exhibiting symptoms, which might be a cough, chest pain, etc. You can rely on positive test results if you have them. You can rely on statistical data as well. So if your radius is 25 miles, one of the points the Supreme Court made was that actually that's a big area. And if you drew 25-mile circles, I mean, you could fit the whole of the UK within a dozen or so of these radiuses. They're actually very, very large and encompass a large number of people, and of significance, in all probability, a local hospital, which will have almost certainly had cases of COVID in it. So you can rely on that sort of evidence, and you can also rely on statistical evidence as well. And this is something which I think is being pursued by groups at the moment with the government about what statistics they are willing to endorse and put forward. Because, for example, at the moment, all we've got, and which we can rely on, are things like Office of National Statistics data and NHS data to show occurrence of disease. So what you've got to remember is that when you actually get to court on these things, you're going to have to prove manifestation of COVID, but only on the balance of probabilities. So you don't have to prove it like it's in a criminal court beyond reasonable doubt. You just have to prove that it's 51%, 49% more likely that there was a manifestation or occurrence of COVID on your premises or within a radius of it. Now, if you can provide statistics that show that in a particular locality, it is likely that 1 in however many people had COVID, you could very, very easily establish on balance that somebody at your premises did, depending on whether your premises was frequented by a number of people, or whether you've got a radius clause or a premises clause, or a number of factors. So it provided clarity on those sorts of things, and it enabled businesses, I think, finally to have some certainty, which means that certainly there's no room for appeal on it. There's no room for well, I mean, there's room for interpretation, perhaps, of some parts of the Supreme Court judgment, but I mean, it's pretty clear and definitive. I think also I mean, there is going to be some litigation on things like what does plague mean, and what do lists of diseases mean, and is the list of diseases an open-ended list, or is it a closed list, and things of that sort. But that's essentially what we're looking at from a legal perspective. It very much depends on your policy, and it depends on the specific circumstances. But overall, it's really positive, I think, for business owners. We were somewhat worried as to whether or not the Supreme Court would end up overturning much of what the divisional court had said. And I think there was some concern about the Supreme Court actually saying that you had to rely on a specific case of COVID at your premises and prove a specific case. It went as far as saying that, but then, of course, actually in the point about causation, it widened the test of causation somewhat, giving this example about the bus, or potentially two people shooting the same victim, or potentially 2 fires burning down the same building. So actually it sort of took away with one hand and gave with the other as far as causation and proof of manifestation was concerned. So overall, it's a very positive result, and I think it's going to lead to a huge amount of litigation.
Thank you very much, Neil, for that. That was most helpful, and I totally echo those words. As a firm, before the Supreme Court judgment, which was 2 Fridays ago, tomorrow it will be 2 weeks since it was handed down, we'd settled cases and we were settling cases. But as a result of this, it is really good news. More insurance companies are now coming to the table and we're settling more and more cases. It doesn't mean, though, that every single insurance policy will settle. There are various different policy wordings, and it's all down, as Neil says, it is all down to those specific clauses within those policy wordings. And for example, AXA Insurance have, for typical business interruption insurance like this, approximately 10 different variants of their policy wording. So it all depends on which particular one you had. So we have to cross-reference it to the judgment, or actually in line with our own legal opinion and tactics that we're running in litigation to get the right result. So although it's fantastic news, it doesn't mean that it's an open checkbook and a free-for-all. We're still seeing lots of resistance from insurance companies, even on the judgment. The reason being, it is less than 2 weeks old. They're taking their time to analyse it, and we're also awaiting what's called a declarations order from the court. That puts in an order what the 114 pages of the judgment really means. The parties are trying to agree that between themselves at the moment, and if that's not possible, then there'll be a declarations hearing when the court will decide what it really means. But it only, as Neil said, only dealt with a specific set of policy wordings, approximately 21 of them, and there are hundreds out there. So the regulator is saying that it's affecting 370,000 businesses. As we're aware, there are many, many more, millions, in fact, SMEs in the UK. So it is the minority, and we're fighting for the majority. So I would strongly recommend that anybody digs their old policy out, and I say old because you may have renewed since then. The policy that you need to be looking at really covers the period of March 2020, around the 23rd of March, in fact, when the first lockdown occurred. That's the sort of trigger point. So dig out your policy, and as a firm, we're happy to review that free of charge on a no obligation basis. Our website is www.biiclaims.co.uk. And up there on the website, you can upload the policy for us to review free of charge, or you can email it, whatever is easiest. And I'd really like you to do that to see if you do have a potential case. I've had some questions here which I intend to deal with now before they get too many on the Q&A. I can deal with some of these and then perhaps move on to some other points. I've had a very good question here. What happens when a business has had the benefit of a company grant and or furlough scheme? So we're talking about government assistance. Now, initially, when we were dealing with these claims early on, we were facing lots of opposition by the insurance company saying, you've had assistance by the government, you've had the grant, for example, therefore your business hasn't been interrupted, and we can use that as credit towards the settlement payout. We challenged that, and as did the government. In fact, the HM Treasury sent a stern letter to the Association of British Insurers, to all of the insurers essentially, and said, this was given as a lifeline for many businesses. You can't be taking advantage of this. We didn't stipulate that this is only applicable to people that do not have business interruption insurance. So the insurers are now starting to do the right thing and ignoring those grants, which for many businesses may make their accounts look better than they actually do. But we appreciate that they were used for very important things, rent, for example, or loans that the business had to pay. So in answer to that question, they should not be taken into account when calculating settlement offers and losses as a result of the pandemic. That, in a sense, is a bonus to the company. I've got another question here, which perhaps Neil, you may want to answer this one. What happens if businesses do not have sufficient cover under the terms of their policy compared to their losses? Do they have any other causes of action they can follow to recoup all of their losses? I'll let Neil explain this, but often in insurance policies there is a limit on the amount that you can claim. For example, you may have £1 million worth of losses, but the limit on your policy may only cover you for £250,000, say.
And where you see that, varies as well, because what you find in some cases is that the limit that is actually shown on the schedule for business interruption might, for example, be £500,000, you know, for business interruption. And then lower down on the schedule, it might say that in relation to the disease clause, your limit is maybe £50,000. Other policies are even more difficult to interpret than that, in that some of them might say £500,000 on the schedule, and then in the policy, in the small print right at the bottom of the disease clause, say actually your losses for this are limited to 25, and that occurs even in the case of some very large businesses indeed, with profits in the with revenue in the tens of millions. So it can come as a surprise. If you have got a limit that is quite a restrictive one, you may find that you have a broker claim on the basis of professional negligence. That is a possibility, depending on the way in which you were sold the policy and whether you were advised about its suitability, because there are a number of duties on insurance brokers, as there are with a number of professionals, about not only just common law duties, but also duties under ICOBs as well, about the business of selling insurance. And so there has to be, for example, a statement of needs and demands. There has to be an explanation of what insurance is being provided, and also a duty to ensure that the insurance is suitable for the needs of the relevant business. So if there is a breach of those duties, there's potentially a claim against the broker that will make up the difference between the limit and what you thought you were getting, or what you should have got. But I mean, it will depend on looking at the way in which the broker sold the insurance and matters of that sort. Just as by way of a very quick example, I realise that the questions are coming in. There was a claim, a specific broker claim about business interruption insurance caused by a fire at premises, and it turned out that essentially there was a holding company who was claiming losses as a result of fire, only to realise that in fact it was the holding company that was insured and not the subsidiary companies who suffered the loss. And actually the court held in that case that the policy that should have been arranged by the broker was a policy for all of the subsidiary companies as well as the holding company, and so the losses were enormous. They were effectively the difference between the insurance for just the holding company and the insurance for all of its subsidiaries. So they can be substantial claims.
Another interesting question here. So if we have a 10-mile exclusion and our policy has specific infectious diseases, we'll not be able to claim business interruption. If I'm understanding that correctly, you have a 10-mile radius of these diseases occurring, which is good news for you. It's easier to prove, obviously, in a 10-mile radius, which would hopefully include hospitals or nursing homes or very busy shopping centres where there is a populous density of people there. That's good for you. The fact that you have a specific list of diseases doesn't necessarily kill this claim. As Neil has said, there's more litigation ongoing, which we're dealing with regarding these specific lists. So I recommend it's still one which you really fight and look into. And if you'd like us to look into that, we're more than happy to do so. So please do provide us with a copy of your policy. That's actually leads me on to another important point, which is a bit of a top tip from me. Don't just sit on these cases and initially, if your insurance company said no, don't just take their word for it, particularly now after the Supreme Court judgment, and don't necessarily just wait for them to contact you as a result of that. Dig your policy out and put them on notice of your intention to make a claim, because one of the technicalities that an insurance company can shirk their responsibilities of indemnifying you under the policy is what's called late notification of loss. So under every policy, you must notify your insurance company of a claim, and depending on the policy wording, it's within a reasonable amount of time, or it's within X amount of days or weeks. And there's specific ways of doing it. And they do like to try and make it difficult for you to make a claim so they can avoid liability on a technicality. Don't fall foul of that and their claims procedures. So do not, notify them of the loss, and we can do that on your behalf and get over those hurdles for you. That would be a real shame to lose out on a valid claim just on a technicality. We have lots of arguments up our sleeves to deal with instances like that by insurers. I'll deal with another question here, just scrolling down a few. Regarding a policy wording that states a notifiable disease must manifest itself on the premises, surely insurers will need proof of that in order for cover to apply. And how could a list of diseases that do not include COVID be subject to challenge? Dealing with the first question first, yes, it is on the policyholder to prove, and it's again not beyond all reasonable doubt. It's just on the balance of probabilities that there was a notifiable disease on the premises. As Neil has explained, that can be done by statistical data, the ONS, for example, or NHS, or by factual witness evidence. I'm a customer, I'm the employee, whoever, I had symptoms of COVID. I couldn't get a test at the time because they didn't exist, or it was impossible to get a test within an amount of time, and I'd recovered by then. That is enough on the balance of probabilities that a disease occurred at the premises. We've discussed about the list of diseases. We have lots of technical legal arguments. I don't want to bore you with those because we could be here for hours, because Neil particularly likes this subject about a specified list of disease. We argue it is not an exhaustive list. Some other questions which have been asked previously are to do with lowball offers by insurance companies and them trying to get out on technicalities. As I've said, they will try their best in other fields to get around paying under the policy. We've had instances of underinsurance. So you insure your business for a set amount of average turnover. Say it's £500,000, but you say it's £500,000, but in reality it's £2 million. And so what the insurance company would have done in that instance, when they realised there was a higher turnover by the company, they would have increased the insurance premiums because they're more at risk if anything went wrong. So when there's a difference, when it's been underinsured, and they realise, having looked at your accounts when settling these cases, that this was underinsured, they usually will take a percentage of that underinsurance off your settlement amount, a bit of a deterrent, which they're entitled to do contractually. So that's something that we are very astute to and look to challenge those instances which are arising. And there's also lots of challenges at the moment about declarations. When you take out insurance, you declare, you answer lots of questions, and you have to say whether it's true or not. And they're taking issue with a lot of those initial questions, sometimes to do with disqualifications of directors or bankruptcy, insolvency, those sort of things. And they're digging very deep to see if there's any inconsistencies, and they're taking real technical issues with those. Again, that's something which we're challenging, and I really recommend that you do instruct us if you're experiencing difficulties like that. The other point that they're challenging at the moment is insolvency. So businesses that change their typical structure of the business, or they're coming into difficulty, and so the solvency of the business is in question. there are clauses within the contract where they are saying that there is no indemnity when this happens. Technically, those clauses do stand, but we have lots of arguments against that. Particularly, one of the best arguments is insurance company, you caused me to get into this financial mess. I paid for this insurance in good faith. I thought I had insurance to cover me for this, and when I needed to call upon it, it just wasn't there. So it's your fault that I'm now in this mess. So you can't be relying on that clause. There are some other questions here. Let's have a quick look. Neil, do you want to answer any of these? There's one about some schools.
Yeah. Let me just find the schools one. In fact,
I can read it out if that helps. We work in schools. We work in schools, and hence all our customers were shut. Our contracts which involved working with young people were all stopped or terminated, which forced us to shut. Does this count as business interruption, as COVID caused all our clients to stop work and thus us? I think first and foremost, we would need to see the policy, the policy there, your insurance policy, to properly advise on that. But I don't suppose you can just generally make some comments on that, Neil.
Yeah, I mean, I think it can get complicated because what you've got to do with causation is you've got to distinguish between losses that the way that the losses are actually calculated in business interruption cases is ordinarily on the basis of a decrease in turnover. And that is what's known as a trends clause, where you compare the turnover from the previous year to the turnover the current year. Now, the Supreme Court actually gave some guidance on that and how to apply it. And you've got to distinguish between the losses that had no connection to COVID-19 and the losses that were caused by the pandemic. And it's those losses which were caused by the pandemic which you're looking to effectively adjust in order to reflect what your losses are. Now, in this case, of course, it says that your customers were shut and contracts with them ended. It's a subtly different case from the case where you've got, for example, a hotel or a pub, because in those circumstances, you literally just say, well, look, we closed, and therefore our disease clause is triggered because of an occurrence within a certain distance or at the premises, and therefore customers simply didn't come through the door. In cases like this school case, and cases, for example, I've dealt with in relation to cleaning companies, the argument has to be slightly different. In the cleaning company case, they actually have a very small office, which is almost a PO box somewhere, and whether their office closed or not could arguably have had no impact on whether their clients cancelled their contracts for cleaning at other premises. And so insurers will be arguing, well, it actually wasn't the premises of the insured that closed and therefore caused the loss. It very much depends on the wording and the subtleties in the way in which the clause is phrased. Some clauses are actually very wide, and they simply say any interruption to your business caused by an occurrence either on the premises or within a certain radius. So in the schools case, it might be arguable that actually, if your policy is something like that, your losses are covered simply because your customers cancelled their contracts, and there's no direct requirement for your premises to be closed. On the cleaning type cases where it's other people's premises, perhaps it's a bit more difficult than that, but there still are arguments based on overall turnover, which you might still be able to make.
Yeah. Just dealing with a query here, is COVID-19 and its consequences now excluded from my policy? For those people that are renewing or have renewed since approximately April or May, a couple of months into the pandemic. It may not be blatantly obvious, but pretty much all insurers have inserted somewhere an exclusion clause. So in terms of their new insurance, whenever that was taken out, going forwards, there will be no cover for events like these. Clearly, the insurance companies were very wide and sloppy in their drafting of these insurance policies, considering the government and insurance companies have known about pandemics for decades now. We've had SARS, we've had MERS, we've had avian bird flu, etc. Lots and lots of outbreaks, Ebola, and these are insurance companies which are usually international insurers, so they're not just in the UK and Europe market. But that's not all lost. For example, if you renewed, say, in April, so just 2 months or 1 month into the pandemic, there is what's called an indemnity period under an insurance policy. And typically that indemnity period is around 12 months from the date of the loss. So that would provide cover from circa March 2020 to, in a couple of months' time, circa March 2021, to provide cover. And the reason for that is, say a building fell down, an earthquake or a fire or something like that, and it was the day before the insurance was about to renew. It would be totally unfair for the new insurance company to pick that tab up. It would take more than a day, often that's why it's at 12 months. It might take a year to rebuild that premises. So it stays with the original insurance company under the original policy. I'm just seeing if we've got any more questions on here. Yes, we have. What happens if we have a Mexican factory which is closed by official decree for a 2-month period owing to COVID? I'm presuming this is an international, rather than a Mexican food, it's a factory over in Mexico. I would need to see the policy for that. It depends if that is covered, if your factory is covered in Mexico under a UK insurance policy. It's very niche, that. I need, if you can send a policy in, please do so. Again, biiclaims.co.uk. Send that through and we can have a look at that. Any more on here, Neil? Perhaps you could do, can you see these, Neil? I can read this one out if not. So if we had a member of staff who tested positive and a number of employees were then pinged by the track and trace, that can surely count as a manifestation that is proven by track and trace.
It might do, is the answer. And the way in which that would be decided is basically by the trial judge, if it goes that far, in your particular case. So there was no Supreme Court or Divisional Court guidance on things like that, because they're very fact specific. So what you'd be saying is, in my particular case, we had employees who tested positive. I mean, certainly that would be manifestation. I mean, I can say that pretty easily. But as far as others being pinged by the track and trace system is concerned, that may count as a manifestation. I mean, obviously the clearest evidence is a test. Possibly next clearest evidence is manifestation of symptoms. You've also got statistics to suggest potentially that people would have had COVID at your premises. But I think that track and trace has got to be relevant to that. I mean, effectively it increases, it's a suggestion as to what the likelihood of manifestation at your premises is. If there is track and trace data saying that your employees need to isolate or whatever, that is evidence that it's more likely than not that there were cases at your premises.
I've got a question here which has been answered partly by other questions, but it's talking about a 3-month limit, and this is what I was talking about earlier about an indemnity period. Like I say, the majority of policies have a 12-month indemnity period, some more, in fact, some 24 months for good policies. However, sometimes in the policy wording, they are sublimited under specific clauses that we rely upon. And 3 months is sometimes a clause that we come across, and it is one of the lowest I've seen. it is a limit on the face of it that would limit your losses to 3 months. That's not to say that your claim is in, as you mentioned here, a dead duck. I would, depending on your losses, I suspect you'd still recover a significant amount of money, and so it's still worth putting a claim in for that. And depending on the response of the insurance company, if they still continue to be in breach of contracts in what we say, you should indemnify us under this policy, and you're not doing so. We can run some arguments which would increase that limit of loss beyond the 3 months. In terms of your loss, it's most important to just document your loss, keep evidence. It's going to be so important when it comes to the settlement of a claim, and that may involve some work between you and your accountant to do that. And in all instances, we will seek to recover costs on any case. That's both legal costs and your professional accountancy costs under the terms of the policy, but outside of the contractual agreement, through the courts. And like I say, we are reviewing these free of charge for members of the IoD. And if we consider that your case on an individual basis has merits, then we'll be willing to take them on a no-win, no-fee basis to assist you. Again, I would go on our website, www.biiclaims.co.uk, or Google BII claims or RL case listers, and you should find a link there with some very helpful information, I would hope, and links to be able to upload your policies for us to review. Unless we have, I'm mindful of the time, it is coming up to 2 o'clock, and I'm very grateful for everybody's time and attendance, and I hope it's been of benefit. But please do reach out to us if you have any further questions that haven't necessarily been dealt with within the time that's been available today.
Thanks, Chris. Much appreciated. The time is upon us, I'm afraid. So I thank all of those people for joining us, but in particular Tej, Chris and James for their expert insights. I think from an IoD perspective, we are fierce advocates of fairness in business and doing the right thing. And hopefully in bringing this information to you today, we can help you ensure that your insurers treat you fairly and that the contracts you've paid for are executed fairly for both parties, and that as an IoD member, you're not disadvantaged possibly by scale in the sort of David Goliath type relationship sometimes there is between insurers. As I say, Chris has given you the web address there. If you have any questions, please send them through to him. Don't be frightened of cost. There is no hidden costs to this. Chris has explained how the business is working. Please ensure that you are in possession of all the information you need to give your business the best chance of surviving what are very unusual circumstances. Thank you very much all for your time today, and in particular to our speakers. Thank you.